Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you'd like to see what John writes on a regular basis, you could head to incomeinvestors.com, or you can find the link to the website in the description below. The outlook for crude oil turned slightly bullish as tensions in the Red Sea intensified following recent U.S. airstrike against Houthi rebels in Yemen. They are an Iran-backed group that has targeted shipping lanes in the Red Sea since late 2023. This isn't expected to be a one-time strike either. In a post on Truth Social, President Trump said he would deploy overwhelming lethal force until we achieve our objectives. For context, the Houthis have launched attacks against commercial vessels in the Red Sea since 2023, effectively choking off shipping in the Red Sea and Suez Canal, two vital trade routes for oil and gas between Asia, Europe, and North America. Tensions in the Red Sea have led to unrest and caused shipping costs to soar, and oil and gas vessels are forced to take significantly long routes around South Africa. And this uncertainty should result in continued strong time charter for marine shipping companies like Hafnia Limited. They're traded on New York Stock Exchange under symbol HAFN. John?
Yeah, thanks, Mo. Yeah, operating a fleet of over 200 vessels, Singapore-based Hafnia Limited is the largest operator of product and chemical tankers actually in the world. The majority of its vessels operate in the spot market, primarily through pools of similarly sized vessels, allowing Hafnia to maximize fleet utilization and revenue, and cyclical freight rate recoveries as well. Now, the company transports everything from clean and dirty, refined oil products, vegetable oil, and easy chemicals to oil companies and chemical companies, as well as trading and utilities companies. If you're not familiar with Hafnia, you're not alone. Hafnia only began trading on the New York Stock Exchange in April of 2024, but it has been trading on the Oslo Stock Exchange since November 2020.
I see that it reported solid fourth quarter and 2024 results.
Yeah, after reporting its best 9-month performance ever, that's in the first 3 months of 2024, management noted that the product tanker market softened in the fourth quarter on sector cannibalization and shorter voyages. That said, Hafnia was able to deliver fourth quarter net profit of $79.6 million, or 16 cents per share, and full year net profit of $774 million, making the year of strong performance. Time charter equivalent earnings, or TCE, for the fourth quarter were $233.6 million. That resulted in an average time charter equivalent of $22,692 per day. For the full year, TCE earnings came in at $1.39 billion, resulting in an average TCE of $33,000 per day. Now, as of February 13, 67% of the first quarter earning days were recovered at an average of $23,989 per day. And 25% has already covered $24,062 per day for 2025.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, what does its dividend look like?
On the dividend front, Hafnia announced that it raised its dividend payout ratio, and that's the percentage of earnings paid to shareholders as dividends, from 70% to 80% when its net loan to value, or LTV, is between 20% to 30%. When the LTV value falls below 20%, it will raise its dividend payout to 90%. The end of the fourth quarter, Hafnia's net LTV ratio was 23.2%, increasing from the third quarter, mainly due to a decline in market values of the vessels. Now, given that, it announced a payout ratio of 80% for the quarter. Now, as a result, it distributed a total of $14.6 million for a quarterly dividend of 0.0294 per share, or $1.16 per share on an annual basis, for a current forward yield of 27.05%.
Wall Street is bullish on Hafnia stock as well.
For the most part, Hafnia stock has been doing well since its dual listing on the New York Stock Exchange. This includes seeing an all-time high of $8.99 per share back on May 31st, 2024. Now, Hafnia stock traded lower in the back half of the year and took a hit after reporting its fourth quarter results. Despite reporting solid fourth quarter and full year results, HAFN stock took a hit when it announced its results in February, most likely because its LTV rate above 20%, which resulted in a big reduction to its quarterly dividend. While HAFN stock is, as of this recording, down 20% year to date and 30% on an annual basis, Wall Street isn't fazed by this setback Analysts have provided a 12-month share price target range of $6.50 to $10 per share. Now, the price target of $10 per share would put HAFN stock in record territory.
John, thank you so much for your insights. Hafnia Limited is a marine shipping stock with the largest fleet of product and chemical tankers. It reported solid financial results, and ongoing tensions in the Red Sea could see its TCE rates climb even higher over the near term. The strong outlook for HAFN stock and reliable dividend continues to be great for common shareholders and especially the 206 institutional holders that own 30.62% stake in the Hafnia outstanding shares. Some of the biggest institutional holders are Acadian Asset Management, Vanguard Group, Barclays, and JP Morgan. That's it for today. And make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.